Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So over the past week, gold bulls have been on fire, pushing the price of gold through the roof and smashing through historical highs. Easing inflation and the surge in safe haven demand are the big drivers behind this upward move, and all eyes are now on Friday's nonfarm payroll report to give us a clue about where gold might head next. So now let's take a quick look at the gold against US dollar daily chart. Gold has been on a tear for 6 straight working days since last Monday. Last Thursday was particularly exciting as the price shot past the upper boundary of the March trading range at $21.95 and even breached the psychological level of $2,200, setting the stage for potential record highs. As of the latest close, we're talking about a 6-day gain of roughly 5.3%. Gold is now flirting with $2,300, and if it managed to break through that level, we could see even more gains. But hold your horses. Yesterday, the RSI indicator went over 80, signaling that gold might be overbought and due for a pullback. If the price dips, look to the $21.95 to the $2,200 range for some solid support. As I mentioned earlier, gold's recent surge has a lot to do with the PCE inflation cooling off and folks seeking safe havens. Last week's February US core PCE data didn't throw any curveballs. Inflation eased from 0.4% last month to 0.3% on a monthly basis, while the year-on-year increase held steady at 2.8%. Even though inflation is still pretty high, the fact that it's cooling down could nudge the Fed to start cutting interest rate come June, making gold look more attractive. But let's be real, there are a couple of things that could rain on gold's parade in the short term. First off, comments from Fed big wigs like Waller and Powell have taken a more hawkish tone recently. Waller's been saying stuff like recent inflation spikes mean fewer cuts or a later start to easing, and Powell's been more like the economy is strong, no rush to cut rates. Hearing that from the top brass of the Fed doesn't exactly give gold a boost. And then there's the March ISM manufacturing data, which unexpectedly shot up to 50.3, marking the first expansion since September 2022 and blowing past expectations. That got the US dollar all excited, with the dollar index briefly hitting 105 and yields on the US treasuries climbing higher. And you know what happens when yields go up? Gold, being a zero-yield asset, starts losing some of its shine. But here's the kicker. Despite all these headwinds, gold's still riding high. So it's like there's more to gold's rally than just expectations of rate cuts and yields. On one hand, the fast flip-flopping on rate cuts is leaving everyone scratching their heads. We went from expecting 5 cuts at the start of this year to maybe 3 now. And a month ago, it was all, let's cut rates before inflation hits 2%. And now it's like, let's take our time, maybe cut less. On the other hand, geopolitical tensions are still simmering, with stuff heating up in the Middle East and between Russia and Ukraine. And with the US elections creeping closer, those tensions aren't going away anytime soon. In times like this, gold, the ultimate safe haven asset, starts looking really good. So to sum it up, gold's been on a tear lately and the bulls are firmly in control. Despite the Fed talking tough and the US manufacturing index heating up, easing inflation increased safe haven demand and maybe a bit of FOMO is keeping gold in the spotlight. Looking ahead, keep an eye on Friday's US non-farm payroll report. Folks are expecting to see 205,000 jobs added, with the unemployment rate holding steady at 3.9% and the average hourly earnings ticking up from 0.1% to 0.3%. If the unemployment rate comes in higher than expected, it could boost the odds of a rate cut in June. And there's also a bunch of Fed officials giving speeches this week, so that could could shake things up too. But remember, what really matters now for the first rate cut is whether the Fed's confident that the inflation is coming back to that 2% target. So mark your calendars for April 10th when the next CPI report drops. If inflation keeps heating up, the Fed might hold off on action, which could put a damper on gold prices. So that's pretty much for this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!